If you have been following the channel for a very long time, you will know that we are not really a big fan of property and construction stocks. But that said, here are some of the companies that we find interesting. So 4 companies over here.
Too busy to find stock ideas? Check out FIRL Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
We have KSL, Persona Metro, Lim Seong Hai or LSH, and GDB Holdings Berhad. These 4 companies, if you look at their year-to-date returns, it's going up. Especially for LSH, you can see the return, it is up 71%. The second highest returns is KSL, is up 43%, GDB 29%, and Persona 17.7%. And no surprises, the reason why they are going up is because their numbers are improving. Revenue and also profits are all going up. And this is especially the case for Persona, GDB, and also LSH. So what do these 4 companies do? I've already break it down for you guys over here. For KSL, they are mainly a property development company. They do have a property investment that only contributes a very tiny in terms of their revenue and earnings. No surprises, the reason why they can do so well is because majority of their development is in Johor. So Johor is currently very booming because of data center and also the Johor Singapore Special Economic Zone. So the property sales is actually very booming over there. And then on the other hand, Persona, they are related to a lot of different type of businesses, but they are all kind of like related to each another. So property development, construction, concessionaire, asset and maintenance, and majority of their projects are located in KL. Whereas for LSH, they are a property developer as well as a contractor. Their projects also is in KL. Last but not least, GDB. This one, they are a main construction guy. And if you guys know about the 8 Conley property development, they also help to construct that project. But that being said, right now they are on the right track to improving their revenue and also profits by securing more new deals. So these deals are the hospital in Bukit Jalil, logistic hubs in Shah Alam and Clegg. And if you can look at their returns on capital, most of these companies are also doing very well. It's about double digits. This is especially the case for Persona and also KSL. So if you look at this black line over here, which is the returns on capital for Persona, as well as the orange color one for KSL, the numbers are improving a lot. So previously, which is about 3 years ago, they are making about 1 to 2% return on capital. But today, both of these companies, in terms of the returns on capital, is up about 7 to even 9%. Very, very good. And this contributed their rise in share price. However, if you look at NAPIC's first half of 2025, you can see that the newly launched residential in terms of the unit launch and also the unit sold, the numbers start to drop as compared to last year's first half. So that kind of like indicates some sort of like a slowdown, or maybe the second half would start to pick up. And if you look at the right hand side over here, the number of launch units start to improve and it is back to pre-pandemic level, which is close to 2017's. By the way, you guys also need to remember that the second half of the year, we'll be having a lot of things that's going to happen. So number one is the removal of subsidy for the RON 95. We also have the removal of subsidy for the diesel, which is a few months ago, or maybe even last year. And also there will be a hike in terms of SST. There's also a hike in terms of electricity costs, water costs, as well as the foreign labor costs. So all of these will actually contribute higher cost of production for this property and construction related company. So if they cannot really pass on these costs to their customer, well, that will actually depress their profit margins. And that's not just the only risk. They also have a risk where there may be material litigation that is ongoing. So for example, KSL Holdings, you can see that they are still having an ongoing court case around here. We wouldn't really go deep into this, but if you guys are interested, you can just pause and read it. This is also the same for LSH, whereby there is a KL Tower 1 billion suit. The High Court allows a trial against the government. FAMI strikes out a case against a new concessionaire firms. And this is actually related to this company, which is Lim Seong Hai. We also wouldn't dive deep into that. But so far, I think LSH is at a good position in terms of defending their case. Yeah, so far, so good. And just a bonus, not only just these 4 companies that we find interesting, there's also another one, the 5th company, TSR Capital Berhad. Year to date, they are up 26%. But if you look at their numbers, it's actually very horrible. They're only making about a 2.4% profit margins. Very, very tight margins. So why do we find interesting is because number one, this company, it is a contractor, but right now they are having a new property development business, which is in Kuasa Damansara. It's a new location, and they have a gross development value of about 324 million, whereby they are building not only just semis, bungalows, but also apartments in Kuasa Damansara. And on top of that, they are being awarded a few construction works, which is about 104 million in contracts for the construction and completion of common infrastructure in Kuasa Damansara. And also, they are given a contract to do this Elmina Business Park 2 for about 75 million. And it's also quite recently that they got this contract. So this company, they are not only just using the resources for their construction business, but they are using the same resources for their property development. So the reason why we find it interesting is because there may be some sort of like a synergy in their business, and it could actually help them to save costs and potentially if all things goes well, in assuming their new launch managed to so very well, their profit margins could be improving. And in addition to that, their numbers in terms of return on capital, gross margin, and also not net income margin, it is improving ever since 2021. So they are trying to get back their footing. And so previously, during pre-pandemic times in 2016 to 2019, their gross margin is about 6 to 13%, but currently it's going up to 30% to even 20%. So there is a double in terms of improvement just at the gross margin level. This is actually a very, very good sign. And secondly, we can see it is the return on capital. Right now, they're making about 5%, which is more than their pre-pandemic level. So this is also another sign of some sort of improvement, whether they are going to be making more sales or the business that they are in, the margins are even they are more attractive. So what this means is that this company's future prospect is looking very, very bright. And on top of that, we didn't mention is this company's market cap is 50 million only, and their Kuasa Damansara's property development, the gross development value is about 324 million. So assuming they make about like a 10% margin, so that can actually contribute up to potentially 32 million in terms of their bottom line. So if you just do a quick rough forward estimate, 50 million divided by 30 million, their forward price to earnings ratio is going to be about 1.7 times ish. So to me, it seems pretty interesting. But that being said, this is not a buy or sell recommendation. It's just for you guys to monitor or to put this company into your watch list, because they also need to deliver. They need to be able to sell off these projects. Then only that could translate into their earnings. But definitely, you may want to keep an eye on this company. Okay, but not everything is rosy. So if you look at TSR Capital's balance sheet, their cash balance is sitting about 5.8 million. On the other hand, their debt is pretty huge. So long-term debt, it is about 20.4 million. Short-term debt is 30.7 million. So if you calculate everything, they are in a net debt position of about 45 billion. It's pretty big. It's almost similar to their market cap. So this is a very, very crucial thing for you guys to look at also. So the key thing is that their Kuasa Damansara project needs to do very well so that they can pay off all of these debts. And if let's say they can, that would actually improve their fundamentals a lot. So this is something that you guys need to take note before investing in TSR Capital. So the final thoughts over here is the reason why we don't like or we don't prefer to invest in construction or property related companies is because number one, they don't really have a recurring income. They always need to hunt for new projects. They need to pour out a lot of capital to buy land and also to develop the land. And also there's a lot of like middleman costs where they need to hire contractor, subcontractor to do their work. So yeah, that is actually a key turn off because of there's zero recurring income in their business nature. The second one is there's a subsidy removal for not only just diesel, but in the future it's going to be RON 95 petrol. So that could actually increase the cost of living for the people. That could dampen the demand for big ticket items like property, and that could actually depresses demand. So that's also another key risk. The third one, there's an increase in cost because of SST high, electricity, and also foreign labor high. So that could increase the cost of production for these companies, and which could depress profit margins. But on the flip side, the government might be introducing a more positive initiative for first-time home buyers in budget 2026. So that is something to look out for. And on top of that, so there's a tax relief of up to 7,000 ringgit for first-time home buyers who buy a property price that is up to 500,000, and a 5,000 ringgit tax relief for property prices which range around 500,000 to 750,000. So that is an additional incentive for people to buy more homes. Last but not least, because of their business nature, they need to reinvest whatever they make into their business to make more money. So it's very hard for this company to give out dividends. If they manage to give out, it is actually a very big bonus. But you don't want these companies to dish out dividends. And the reason is because if they start to give out more money, well, they need to find ways to raise money to buy the land and also to develop the land and make more money. So those are the 6 key points that you need to know before buying any of these counters. But for sure, there will be some sort of short-term and long-term catalysts for the 5 mentioned stocks. But if you want to know more stock ideas that we find even more attractive than the mentioned stocks in today's video, you can check out inside FIRL Pro. And just to share you guys, this is our August 2025 performance. So far, so good. September will be even better. So just to share with you guys the returns for our portfolios, our Malaysia is up 38%, our global portfolio is up 15%, and our boring portfolio, which covers dividend stocks, is up 6%. And if you want to know what are the names that we have initiated in this portfolio, you can just check it out inside this program. It's just a 1-year program, and it's a place where we share a lot of information that might not be accessible to the public. It's because these are things that we do research on the ground, and also we get some information from the CEOs or even industry experts that might not be available publicly. So for example, we have written this company called KGB or Kellington Group Berhad, and we have initiated in late October 2022. We haven't really sell it yet, but if you want to know about how we do our write-ups, there is a free sample for you over there. And not only just KGB, we also did share, which we also initiated a few years back. And also we share 3 management notes inside this free sample, as well as a video about modes, which is shared inside the SIB program. And all of this is totally for free. All you need to do is just go to the links in the description and comments and subscribe to the free sample, and you can get access to that. And yeah, that's about it for today's video. Make sure you guys stay subscribed, like this video for more, and we'll see you guys next week.